The Nasdaq still solidly in bear market territory despite bouncing back today. Good day so far, but is the market really an indicator of our economic strength? To market watcher Richard Leone and FBN AM co-host Lauren Simonetti. Hello to you both.
Welcome.
Hello. I saw you shaking.
To New York.
Yeah, it's good to be here, right? It's Christmas. We got the lights. We got the trees. It's fun.
Exactly.
I saw you shaking your head there when we were talking about the president giving out market advice.
He views the stock market as a gauge of his popularity. So when it's come down and the market averages are off 15% in the month of December, and you got the Dow and the S&P more so the S&P teetering on bear market territory and the Nasdaq in bear market territory, you somewhat have to take credit on the way down too. But he is passing blame on to Fed Chair Jay Powell.
Richard, you're somewhat of a bull going forward here.
Yeah, I am. If we look at the underlying economy going into 2019, I think it's very healthy.
Yeah.
We can't forget the consumer is 2/3 of the U.S. economy. The consumer really has two big tailwinds right now. The first is low energy prices, and the second is a very supportive labor market, which we think is going to drive consumer spending well into 2019.
And I guess we're seeing some of it now with the Christmas sales numbers that have come out.
The issue for Wall Street right now is they're trying to predict the future. If you look at the present, everything is fine. I mean, we all shop on our phones and online. That's happening, but we're actually going to the stores as well. Traffic is up. The economy at present is fine. Wall Street's worried about trying to predict a slowdown that may or may not happen in the future. But this is a very long bull market. Over 9 years now. The Nasdaq is up 388% since March of 2009. So you have to let some air out. Arguably, that is what's happening now, although it does feel a little bit oversold.
I think that's exactly right. You know, we also have earnings expected to grow 7% going into 2019, coming off a really big year in 2018. Interest rates are still at historic lows, and they're really approaching neutral. Fed Secretary made clear that he's going to react to market data and take an overall approach. They're not just going to raise rates blindly. And another factor is the sell-off we've seen in the markets, I think, are going to make it difficult for two things. It's going to make it more difficult for us to get further embroiled in a trade war, and it's going to make it harder to raise rates quickly.
Yeah, but the president says he is going to take China head on. Why do you think it would sort of? You think the markets might slow him back? Because he's insistent and adamant on this with China.
He is, but I think it's possible the market's slow him back. I do. I think coming into the elections in 2 years, he certainly doesn't want the market to react the way it did over the last couple of months.
Lauren, there's kind of a couple different ways you could look at this. You brought it up. The Dow is down about 19% from its high. The S&P about 20% from its high. The Nasdaq 20-something%. But they're all up triple since the crash. So what's the way to look at it? That it's down from the high or triple? And if you've been in somewhat over the last decade or so, you're doing pretty well.
You can follow the president's advice since he's in the market for dispensing financial advice and just buy everything, but buy low. This is an interesting time of year also on the calendar because it's the final week of the year, so many folks are already away. They've closed their books. But it's also the time of the year, maybe volume is low, but you do have that Santa Claus, that historic rally, the end of the year, and it does go a little bit into the new year. So for that not to happen this year would be unusual. Having said that, this has been an unusual year. But stocks just went on sale for a lot of people looking to buy. And the fundamentals of the economy are absolutely strong. This segment is about the Nasdaq, right? It's about those tech-heavy stocks. So I do have a worry, and I'm curious your thoughts on this for 2019. You got a lot of major companies, unicorns, who came from the financial crisis, whether that's Uber or Lyft or Pinterest. They might make their stock market debuts in 2019. I'm not sure if this volatility and this downturn continues, if they'd be able to do that.
I think that's certainly possible. You could see a hold on some of those debuts. In terms of technology companies, I really like blue chip names with valuation support going forward.
Like which ones?
Like Adobe, like Microsoft. I think the cloud computing business for Microsoft is a really good growth driver for them and supports a valuation premium.
And looking at the FANG stocks, Microsoft is the only one not in bear market territory. The others have come down so tremendously because they had a nice run to the upside.
2019 looks like what you think?
I think 2019 looks okay. I think we're going to see increase in equities. We're going to see we have a 3,200 price target on the S&P, and the economy stays the way it is. I think we're going to be okay.
Lauren?
I don't think there's the R word on the horizon. I think the market's trying to talk itself into there being a recession. I don't see it, but then again, you don't usually see these things ahead of time. They kind of just happen, but there will be a slowdown. How big? I don't think it's going to be too much to worry about.
I think that's correct. None of the traditional factors indicating a recession are present right now.
We will see what happens. Richard, Lauren, good to see you both.
Good to see you.
Great to be here in New York to see you both in
Absolutely.
person.